As Merrill Lynch plans a path for Bitcoin's global legitimacy, the SEC has just issued an investigative report today that concludes that the digital asset DAO ICO tokens were indeed securities. Additionally, the SEC concluded federal U.S. securities laws apply to anyone who offers and sells securities in the United States, whether or not the issuing entity is a decentralized autonomous organization, and regardless of whether those securities are purchased using U.S. dollars or virtual currency. So what does this mean for ICOs and initial coin offerings? What does this mean for virtual currencies like Ethereum and Bitcoin? And does the SEC report signal the end of just the beginning of blockchain technology into the conscious mind of our money culture? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So we have some sort of breaking news coming out tonight from the Securities and Exchange Commission, and it's from the SEC, the United States SEC out of New York City that governs and regulates financial investment vehicles, financial securities, gold, stocks, all sorts of money-related issues. And in the world of money-related issues, there is blockchain technology. Blockchain technology, distributed ledger technology, which includes but is not limited to Bitcoin, Ethereum, and a whole plethora of different cryptocurrencies, crypto tokens, digital assets, and all sorts of distributed, decentralized peer-to-peer technology. And so, there has been this, past, what has it been, 7 years or so, where so much of the world has not understood blockchain technology. The SEC, the governments, the financial institutions, not just the entire world, but these governing bodies of the world didn't understand what was happening, what blockchain technology was. They perhaps thought they could just turn off a computer or purchase the technology or just shut it down. And so there's a lot of confusion about what was happening, how it was working, and those days are over. The SEC has come out with this report. They've done their investigation. They have precedent and case study to look at with Ethereum and Ethereum Classic and the whole DAO incident that happened. And the release that's out now, the report that's out now, is really the groundwork of everything that's going to be coming next. And it's really interesting because there's so much additional news and momentum and energy. There's right on the heels of the excitement of the SegWit going through between the BIP 91, and people are celebrating because this activation seems like it's going to get activated and then it's going to get locked in 2 weeks after that, after August 1st. But we have this Bitcoin grenade bombshell with this Bitcoin user activated hard fork that is essentially going to guarantee that Bitcoin forks into two different coins. It's at this point, to me, very, very unlikely that we're only going to have one Bitcoin. It's possible that we will be left with one Bitcoin at the end of all this, but it really remains to be seen what actions are taken by the miners. And if the rebel miners who are anti-SegWit and pro big block size, if those miners have a financial incentive to mine this user activated hard fork, this non-SegWit altcoin that is like Bitcoin but not Bitcoin, if they have a financial incentive to mine that blockchain, then Bitcoin will continue existing. But if the weight if there's a vacuum in the price of that, then that it's possible that Bitcoin can vanish out of existence. But it seems as if the politics behind is very strong, and the opinions behind are very strong, and this is just a crazy world. And so it's more of a reason why we want to understand what's going on with Bitcoin. What is Bitcoin? What are these altcoins and these alternative coins that are continuing to come out? And then on top of that, what's happening in the world of regulation that is perhaps both a blessing and a curse, depending on who you ask. On one way, it's going to stifle innovation, but on another way, it could perhaps expand and explode innovation. Really, the difficult part is that these rules and these regulations are really going to restrict what free people could do and what anyone can really do. So with that being said, why don't we take a quick peek at the market, see where we're at with the Bitcoin price, then pop into a few points in today's news, dive a little deeper, and let's discuss. All right, so popping over at coinmarketcap.com, taking a quick look at the market capitalizations. We have Bitcoin up to a 41% dominance. The 24-hour volume is really staying steady around that $4 billion mark. And our total cryptocurrency market cap is $87 billion. With that, we've had the most trading in the past 24 hours in Bitcoin, although we're seeing red across the board. This ICO, or not the ICO, the ICO SEC news is probably having a direct effect on the cryptocurrency market in general. So I'm guessing this is one of the reasons why everything is red in this very moment. And where are we? Bitcoin at $2,500. Today's July 25th. We're gonna have the forking of Bitcoin, or the activating of SegWit, or a little bit of both, in just a couple days. Lots of exchanges are going to be shutting down probably on the 31st, even including Coinbase. So if you're going to be purchasing any Bitcoin through Coinbase, for example, and you're going to be doing it through your bank account, so that may take 7 days, you will not receive that Bitcoin in time to have the benefits of both Bitcoins if and when we actually do permanently hard fork in 3 to 4 weeks from now, let's say. With that being said, I was taking a look at Coinbase. I don't have it pulled up right here, but Coinbase is saying that they're going to be supporting the SegWit user-activated soft fork, which is the actual Bitcoin, and that they're not going to be selling or distributing Bitcoin from the hard fork altcoin version of this Bitcoin. At the same time, they also said that they're not going to be taking everyone's Bitcoin cash of this user-activated hard fork Bitcoin. So in case it turns out to be a viable thing, Coinbase may reimburse you, but that's a big maybe. And if you really want to take full advantage of Bitcoin and the blockchain technology, then you really want to be learning about wallets, and perhaps thinking about running a full node, and really being an active participant in the blockchain technology that you support the most. Even in New York State, it's legal to run Bitcoin and blockchain software. So there's really no reason why you can't have your direct access and direct control over your keys, especially in times like this, where it's really the cryptocurrency and the technology is about trusting the cryptography and trusting the decentralization of the technology. It's the exact opposite of trusting the centralized sources. So sorry for this rant. What it comes down to is that there's a lot happening, and you really want to take control of your own keys. If you haven't already, you really want a private wallet. You really want a decentralized wallet where you have direct control of your keys, and you write down the backup phrase, the backup password. Get a Jax on your smartphone. Get a Trezor or a Ledger, which are all very user-friendly options for everyone. That's why I recommend those, because they're perfect for anyone who's just starting out in the cryptocurrency world. Yeah, and so turning back into the market, we have Bitcoin at $2,500. This other Bitcoin that everyone's talking about, this hard fork, which is not really Bitcoin. It barely should have the name Bitcoin. I believe it's trading in terms of the futures trading at around $400 of one of those. And so they said they're going to go by the word Bitcoin BCC. So Bitcoin Cash said they're going to use BCC. But there's this big problem, because how is Bitcoin Cash going to use BCC when BCC is already being used right here by the BitConnect coin? And so, yeah, it's going to be really interesting. Number 11, this isn't just some altcoin that's, a few hundred down, or even on the, in the 200s or the 100s or 200s. This is number 11. And so number 11 is BitConnect, and the BitConnect coin is BCC. So it's going to be a lot of confusion in August 1st. I don't think they thought through the marketing for the Bitcoin Cash. And I don't think they thought through the marketing for the BCC. There's a lot of different exchanges and all the different users who are apparently, purchasing millions and millions of dollars of BCC. It's just going to add a lot of confusion to the market, and I just don't see that being a good thing for Bitcoin Cash, or maybe it's a good thing for BitConnect. It's definitely some good press that's coming their way, because everyone's looking into BCC now, I suppose, right? Interesting. So this real quick, this Bitcoin Cash, speaking of this, the BCC or Bitcoin Cash, Charlie Shrem here is tweeting that Bitcoin Cash is just another altcoin fork, one of many. So one of many Bitcoin altcoin forks. It's not even like a real hard fork of Bitcoin. The only difference is Bitcoin users get free money to dump this Bitcoin Cash coin. So what he means by this is just another altcoin fork, is that all this user activated hard fork is doing is taking the existing Bitcoin blockchain. It's just copying and pasting the code, increasing the block size essentially, and then pressing go. And then by doing so, they're just giving every existing Bitcoin user access to this Bitcoin in this other network, and it's just free money for all of these people to then take your existing BCC tokens that are going to be existing on top of these Bitcoin private keys, and depending on who's holding your keys, and the technology they've set up through that, how quickly that technology is created for where you have your wallet and where you're storing your Bitcoin, you will be able to sell your Bitcoin Cash altcoin Bitcoin without selling the actual real Bitcoin. Alternatively, you can do nothing, hold on to both coins. Say you have one Bitcoin, you can hold on to both of those, that one Bitcoin, the private key for that one Bitcoin, and no matter what happens, say by some chance SegWit does crash and burn, and Bitcoin Cash does go to the moon because it has the backing of all the governments and financial institutions of the world, then you can just rest assured knowing that you have both coins, you have both tokens. But again, that would only happen if you are in possession of your private keys by, say, July 31st, or depending on where your Bitcoin is right now, hours before this Bitcoin hard fork. So jumping into today's news and taking a peek at what's going on, first I just wanted to bring up this article real quick I thought was really interesting from Cointelegraph.com. And so what we have here is an article is talking about Merrill Lynch plotting to bring Bitcoin's path to global legitimacy. This is just another tip to come up, another shiny nugget as we're digging through the mines over here, and we see this major financial institution. It's like we've all headed to San Francisco, and already the big banks are following, the big banks are forming. We've seen so much of news come out about JP Morgan Chase supporting Bitcoin, supporting Ethereum, mining Bitcoin, mining Ethereum. Even if they say it's for testing purposes, they are getting all of their ducks in a row to do what they need to do to be part of this blockchain revolution. And Merrill Lynch, another global banking institution, is really no different. They see the writing on the wall. They see the possibility of money. They see where the money is going. And if they are plotting Bitcoin's path to global legitimacy, this is just underscoring Merrill Lynch's position, already existing, already rooted inside Bitcoin and potentially Ethereum's blockchain. So Merrill Lynch's commodity and derivative strategist, Francisco Blanc, has just noted the similarities between digital currencies and gold, and this article sort of goes on and talks about the value of salt in the world and how salt was mined and used as money, but its durability wasn't strong, so people switched to gold and copper, and then from gold and copper to silver and silver dollars, and from silver dollars to paper cash backed by full faith and credit of the government, and then making the leap of money as we know it into cryptocurrencies. And this isn't a crypto anarchist. This is a strategist from Merrill Lynch. So at the same time, they are recognizing what they're referring to as risks in terms of the safety, the liquidity, and the return. Each of these, we know that they're being addressed. We know that in terms of the bank's perspective and the user's perspective, safety is coming, and the liquidity and the return are perhaps a little bit of perspective. The liquidity is increasing all the time. Bitcoin used to trade in the millions, the hundreds of millions. Now we're trading in the billions of dollars per day, and that can easily increase as these additional companies and additional people are purchasing Bitcoin, additional exchanges are exchanging Bitcoin. The liquidity can increase rather exponentially. What I thought was really most interesting about this article was the perspective of collateral damage. And this was really, really interesting. I was thinking about this in terms of domain names from about a decade ago, and how at one point when different companies were going through bankruptcies, and in the IRS or the bankruptcy paperwork and whatnot, some of the assets that were being listed were the actual domain names that were being purchased by these companies. So, you know, if you were an electronics company and you know, you purchased a domain name, maybe you purchased spy.com for $50,000, and you go into bankruptcy, or maybe you sign up for a loan, and you want to say what do you have to put up of value. Maybe you have patents, maybe you have buildings or cars or houses. Well, these domain names 10 years ago or 20 years ago, or at some point, started being recognized by both the IRS and the court systems and the banking systems that they're valuable, that pets.com could be sold for $1 million for the domain name alone. And what we're seeing in this article here, turning back into this article, is that the strategist is pointing out that the first and biggest hurdle to be accepted is for Bitcoin to be accepted as collateral. So I was just having a conversation with someone, and I was asking them, you know, they are part of a traditional institution, and I was wondering if they accept Bitcoin, and it was sort of a no, of course not. We don't, you know, like funny money. You know, it's like they probably have no idea what the price of Bitcoin even is right now. And so what this is pointing out is that when the local banks, and we might be viewers watching, you know, some of you out there that dislike the banks and prefer that banks don't exist at all, that's one topic of conversation. But in terms of us recognizing the signs, because banks do exist right now and all of this is currently happening, when we start seeing banks and different loan companies, even day loan companies, and you know, those corner loan companies that you know, rob people from their weekly paychecks and whatnot, cash advances and whatnot, but especially the big banks, once they start seeing Bitcoin and accepting Bitcoin as a collateral for you to get a loan to start a business or to go to school perhaps, or for whatever reason, you know, you want money, you let them hold a Bitcoin, they let you borrow money that's, you know, perhaps more or less than the value of that Bitcoin or that cryptocurrency. This strategist is saying that they're not aware of any major institution that's taking cryptocurrency as collateral at the moment. And that's this, again, the collateral damage is the first and biggest step to setting up Bitcoin and cryptocurrency as a legitimate global asset. And then it goes on, despite this warning, Wall Street is warming up to digital currency as a potential investment product. And so we know Wall Street's warming up to the digital currency because we know that GBTC has been purchased by several different hedge fund managers, as we've discussed in our recent videos. And as we've discussed in other recent videos, GBTC is, through a string of companies, owned by NASDAQ, and NASDAQ, you know, is Wall Street. So Wall Street is definitely warming up to the idea of digital currencies. We know that they're experiencing huge successes in their portfolios, just as the average investor is. And the banks are aware of this because the banks are hedging this money. And so this is just a step in that direction. So once we see that banks are accepting Bitcoin as collateral, then that's another sign that we are extremely close to the tipping point, if not past it at that point. Excellent. So looking at the main topic for today, turning to the U.S. Securities and Exchange Commission website, taking a look at this press release, which they have just released a few hours ago. This is essentially breaking news. The SEC issues an investigative report and is concluding that the DAO tokens, the decentralized autonomous organization associated with the infamous Ethereum hack, which then later led to the decision to hard fork the Ethereum blockchain, leading to the Ethereum which we all know and love today, and also on the sidelines, leaving us with the original classic version of Ethereum Classic, which also exists today. So in its press release, which will be linked below, the U.S. Securities Laws may apply to offers, sales, and trading of interests in virtual organizations. This is very, very clear, black and white, with some ambiguity. But even the ambiguity is pretty clear once we get into it. How do you like that description? So such offers and sales conducted by organizations using distributed ledger or blockchain technology have been referred to, among other things, as initial coin offerings or token sales. And so in this report, we have, in the press release, you'll be able to link to the actual report and the investigation that we're going to be talking about. They really go over what happened with the DAO, not just a DAO or any DAO or a generic DAO, but the actual company called the DAO that they named themselves the DAO. And so this really looked a lot at that organization. And so I thought that this was interesting, that the SEC studying these effects with the distributed ledger and the innovative technologies. They're still encouraging participants to engage with them, even though that they're putting out all this information, and really saying that everything that everyone has been doing has essentially been illegal. They really seek to foster the innovation while raising capital, but they want to keep people safe. So that's really the guise that this is under, as the SEC has always been under, is really keeping consumers safe while giving more power and more control to centralized organizations that are very, very large and already have a lot of power to begin with. So what do we have here? This part in green, the DAO and associated entities and individuals, so this is the conclusion, violated federal securities laws with unregistered offers and sales of DAO tokens in exchange for Ether. And this is really interesting. We're going to talk about this. Ether, which is a virtual currency. And so they were trying to say that it was a crowdfunding contract, but the SEC, the reason that they give that it doesn't meet the requirements of a regulation crowdfunding exemption is because among other things, it was not a broker dealer or a funding portal registered with the SEC. So if you want to, be a part of a crowdfunding contract that doesn't fall inside the SEC regulations, then it needs to go through an organization which does fall into SEC regulations. No matter what, they want you to be a part of the system. They want you to be inside of here. So in some way, everything is defined. And now that they understand what the words ICO are, they understand token sales, these words are now also defined. And there's no turning back from where this is going and what this is saying. So moving on, I'm sort of skipping over a lot of what this is saying, and you can go into depth and read this press release for yourself. But I thought this was super interesting that in light of the facts and the circumstances, the agency has decided to not bring charges against the DAO. And instead, their stance is to caution the industry and market participants. The federal securities laws apply to those who offer and sell securities in the United States and territories, regardless of whether the entity is a traditional company or a decentralized autonomous organization. It's also regardless of whether those securities are purchased using dollars or virtual currencies. They're essentially saying that dollars are the same thing as virtual currencies. And also regardless of whether they are distributed in a certified form traditionally or through distributed ledger technology and smart contracts sort of automatically. So this really covers their bases to cover every single type of ICO that's out there. But there's little caveats, and we'll see if we can talk about those and really break it down a little bit. So a couple articles from Coinbase. I just wanted to turn to CoinDesk, Coinbase. Just want to turn to CoinDesk just to see if we can get a couple quotes to see what other people in the industry are saying already about this SEC decision. And so this first CoinDesk article is just saying what we all know, which is that knowing that the SEC was going to come up with this decision and knowing that the SEC was absolutely going to equate an ICO with an IPO, and people changing a couple words around alone wasn't going to obfuscate, what the SEC would see as a fact. So we knew this was going to be happening. And so, this Washington, D.C. based lawyer, Stephen Pally, told CoinDesk that the agency's release confirms that the securities laws don't stop at the computer keyboard and that the SEC laws do apply throughout all of blockchain technology. What remains unclear is how the SEC may view other token sales that have since taken place in the U.S. directed by U.S. citizens. Those have adapted creative workarounds to address security laws, maybe wondering if their approach was sound. And so there's a difference between the ICOs that have been strictly formed in, say, maybe Hong Kong or Sweden, which are strictly telling people inside the United States that they're not authorized to participate in these ICOs, and the ICOs that are directly located in America. And so the ones that are in America, that where these ICOs have existed, have they changed and structured their ICOs in such a way that the SEC will not see them as a security? It remains to be seen. So smarter token issues have greater plans to keep these offerings out of the U.S. and avoid their tokens to be on U.S.-based exchanges, really leaving the United States out of the picture as much as possible to not require their company to, or their ICO token, their cryptocurrency token, to have to abide by these laws by the SEC. Whether it's sufficient enough to avoid liability, it's going to be on a case-by-case basis. And this has been stated by the SEC, is that they're going to apply the rules and the regulations different from one cryptocurrency to the next on a case-by-case basis. And so they will essentially be able to cherry pick and choose winners with one cryptocurrency and another in terms of how these decisions will come down in the future. So this is some advice perhaps, that those formulating an ICO need to account for today's action by the SEC, seek guidance from experienced counsel in formulating their ICOs, and analyze their legal issues, consider dialoguing with the SEC staff. So the SEC didn't issue a blanket statement and characterization on all these securities, and that again, this is going to be made on a case-by-case basis for them to do this sort of cherry picking. And so this is so because no one is getting charged, and because the DAO is not getting any charges, and because there's no blanket statements being issued, this is being viewed as a shot across the bow, so to speak, to anyone who has issued or is issuing or is planning to issue any sort of token sale, that they now understand the SEC is going to be most likely aggressively applying these laws to rein in what's been happening with this massive amount of sales with all these ICOs. So more quotes from CoinDesk. We have Eamon Gun Serir. SEC ICO guidance is the end of the beginning of blockchains. So we've been living in the wild, wild west. The sheriff is coming to town. And so he's saying that this could potentially have a chilling effect for innovation inside the United States. And this has already had a chilling effect, because so many companies have been hesitant to do anything in the United States because the laws are different even on a state-by-state basis. They may be legal in one state and illegal in the next state, knowing that federal regulation is still yet to come. So this is just another reason to slow down innovation within the borders of the United States, and to increase innovation in other countries that are accepting of blockchain technology more on a mass level and a mass scale. So what does this mean from Serir? This portends the end of the beginning for blockchains. Then we can no longer count on regulators not understanding what blockchain is. They now understand what blockchain is. Yet, this also represents public acceptance of on-chain financial instruments as being equivalent to traditional ones. And so this is really some of the most major news that's coming out of this, really beneath the surface, is that on one hand, the government is regulating the cryptocurrency. They're making decisions on the cryptocurrency. They're saying that when you purchase an ICO token with Ethereum, you are purchasing that ICO token with essentially what they see as money. So on one hand, they're throwing in this regulation, and nobody likes this regulation. On the other hand, they're essentially validating blockchain technology as being legitimate. They're validating blockchain tokens as being currency, and they're validating this whole system while at the same time trying to create the regulatory infrastructure for them to have some sense of control over as many of the people as they can. So let's turn to Reddit lastly to wrap this up. I know this is a super long video, a lot of information to go through, really trying to pull out as much as we can. And so over at Reddit, you know, they're breaking this down, and they're breaking down why this stuff matters. And they're saying that why did they find, they're asking, this user is asking, why did they find the DAO tokens to be securities? So one, the DAO tokens were sold for money, because again, they define Ether as money. So Ether is now money instead of property. That would have huge implications on how it's used and how people are taxed. Two, there was an expectation of profit from purchasing DAO tokens. That's pretty common across the board. I don't know how anyone could sell an ICO token and get someone to honestly think that they're buying something that's never going to increase in value, or that they're not buying it for the increase in value. It's sort of hand in hand. And three, the profit expected to the profit is expected to be from the managerial efforts of others. And so what's going on is that all three of these, again, can be argued for almost any single ICO, and that every single ICO is basically sold for Ether, and that ICOs that want to make an argument against point number two, that there's not an expectation of profit from purchasing their tokens, and you know, would have to have their users just purchase the token for the platform, not mention anything about the tokens ever going up in value, and only selling it because it gives the user access to some feature in the platform. So this person is saying that if the token is sold and the token doesn't ever reference value, all the token does is give you access to a feature in the platform, you know, is that enough for that to then not be a security? Even then, if, you know, that token is being bought and sold like baseball cards over on someone else's exchange. It's going to be really, really interesting, because you know, the most interesting part is that they're not arguing the fact that the Bitcoin or the Ether is money. They're not disagreeing that that virtual currencies are currencies, and it's just really interesting to just see the pickup in regulation, to see the pickup in interest from banks, to see the pickup in interest from the governments. And this is just the slow, steady march of legalization, legitimization, and adoption of the Bitcoin to blockchain technology across all levels of our society, from our everyday users to the institutions to the governments and beyond. What's most important, again, I started off by saying this, you know, pretty deeply in the beginning, but again, when all these regulations really start to kick in full force, you have the option to be in full control over any Bitcoin or cryptocurrency that you may have. So if you haven't done it already, get yourself that Bitcoin wallet. What do you think about, you know, all of this craziness with the SEC? Do you think that this is a good sign that we are even closer with Bitcoin adoption, that we are even closer with Bitcoin going to $5,000 or $10,000, and this is just laying the groundwork for the institutions to really take advantage of what's going on, and for the institutions to really make billions of dollars as all of these cryptocurrencies fly to the moon? Yeah, share your thoughts below. Love to know what you think. Hit that like button and subscribe if you haven't subscribed already. Sorry for the long video. A lot of information gets out there. Again, look forward to continuing the conversation. Until then, I'm glad we're minting coins.